So here's another SPAC, guys. It's up over 50% in the last month, with most of the gains actually coming in the last few days. And it's no secret that SPACs are making many millionaires here in 2020, and the gravy train just keeps chugging along. Today we're discussing a SPAC merger between Apex Technologies and AvePoint, and this is different because it's not an EV company like most of them are. This is actually a software business that's focused on subscription, so it's a little bit different and a bit of an interesting company to talk about today. Now, the merger was announced recently. There's still going to be a while before, the symbol changeover and everything clears. So we're still pretty early in this process, which means there is potential to ride this wave up like many have with other SPACs before. So I want to give you an idea of what this company does and talk a little bit about, what you could do with this possible investment. Now, specifically in this video, what I'll talk about first is what does AvePoint really do? That's the business here that's going to be going public through this reverse merger. Secondly, what is the actual terms of this merger? We're going to look at financials, valuations, all that kind of fun stuff. Then finally, number 3, is this stock actually worth buying today? That's the big question, and that's what I'm going to answer today. Now, as requested by you guys, timestamps are in the description down below. Pretty much all videos going forward will have those. I don't want to waste your time. So if you want to skip forward and look at the answers to any of those questions, check our description, be my guest. But either way, I'd ask you to smash that like button down below, guys. It really helps out the channel tremendously. And if you find any value in this video, consider sharing it with a friend as well. Oh, and just a quick plug, if you haven't followed me on Instagram yet, link description down below. We're reaching around 500 followers. I want to hit 1,000 by the end of this year. Guys, I know you can help me get there, and I'm going to be providing a ton of content on Instagram, exclusive to Instagram. So I'd suggest following me on there. It's absolutely free. So first off, we're going to discuss what AvePoint actually does. So this is a software as a service company that is primarily focused on data management solutions for the Microsoft Cloud. So yes, if you caught that, this company is specifically focused on Microsoft customers and products. So it's a fairly niche company with a niche market. But let me just say this, niche isn't necessarily a bad thing. If you look at their total TAM, it's actually $33 billion worth by 2022, which is just a year away. So this could be a big market for this small company to capture. They currently have 1,300 employees and 7 million cloud users with 16,000 accounts. So like I mentioned, this is kind of like an indirect Microsoft play. Microsoft is trading at a pretty expensive valuation today. If you didn't get into Microsoft earlier, this could possibly be another way to kind of get some exposure to the business, kind of indirectly. They're independent companies, they work separately, but this company is reliant on Microsoft and Microsoft's success. So as it keeps growing, this should theoretically keep growing as well. Now, in terms of the actual value that they provide, they share with us a slide in their investor deck that I think summarizes this pretty well. Now, the first year is in terms of data growth. Organizations are seeing record high amounts of data now, more than ever before, and what this is causing is data governance to get harder and harder, making things very inefficient for companies. This could ultimately lead to bigger issues with possible privacy and cybersecurity issues if things are not dealt with and managed at an early stage. So in comes AvePoint, and they claim to bridge this gap that's created between what Microsoft Cloud offers its customers and what the enterprise customers actually require. And this slide here pretty much summarizes the value and pitch that AvePoint uses to pull in an existing Microsoft customer to use their software as well. Now, there's a whole list of things I can go through that they provide value in specifically, but I'm not going to bore you with the details. You can pause the video right here, read through all these points, because if you are interested in investing in this company, you need to understand this. The bottom line you need to understand with AvePoint is that they're focused on improving the experience that customers have with the Microsoft ecosystem, so you could kind of think of them as a one-trick pony. But hey, again, one-trick pony is not necessarily a bad thing. Now guys, as of today, there's around 250 million Microsoft 365 users, but in the future, this is expected to double to 500 million users. AvePoint today has 3% of these users with their software, but their future goal is to have more than 3x that to 10%. This would result in around 7 million users to grow to over 50 million users if they can achieve this goal. These customers come from every industry, from retail, finance, pharma, you name it. Some of the biggest, baddest companies in the entire world use Microsoft products, and as a result, there's an opportunity here for AvePoint to get in there and get these large giants under their software and service as well. So by now, you should have a good understanding of this business, the service they provide, the value that they provide, and you may actually start to notice some pros and cons of their business model, but we will get into that a bit later in the video, and I will share my thoughts and concerns on that as well. Moving on, what is the merger terms with Apex here and AvePoint? So like I mentioned, the reason that AvePoint, however you pronounce it, is in the news here today is because of the recent SPAC merger announcement that came out just about a week ago with Apex Technologies. So specifically, the merger was announced on November 23rd, and it's valuing the combined company at $2 billion. So it's not a very small, tiny company, but it does still have a lot of room to grow at this current price. Now guys, here is the pro forma calculation. You know, every SPAC has this, and this shows us the breakdown of how the market cap and shares will work after the merger, and we can see the combined company will actually have 199 million shares outstanding. So if you buy APXT stock today, Apex Technology, after the merger, you will only own part of 17.6% of the entire combined company. This is because existing AvePoint shareholders, PIPE investors, and Apex founder and private placement shares will own the remaining 82.4% of the combined company. This is important to note because it pretty much says that, you know, buying Apex stock today is only a very tiny portion of what the entire combined company will be once this merger completes. I see this time and time again, guys. It's a little bit concerning because these SPACs pretty much seem like a way out for private investors that, you know, want to cash in and realize profits, because you can see here, buying into this SPAC today only results in a fraction of what the final company is actually worth. Just keep that in mind. Oh, also as a side note, I watched the China Hustle recently, and if you haven't watched that, I highly recommend it. I feel like I should make a video on this. Maybe I will, maybe I won't. Let me know if you guys want me to talk about it. But essentially, that talks about SPACs back in the day when, you know, all these Chinese companies were coming in, and that did not end well. And I feel we may be going through that again now with American SPACs, so just be cautious. Anyways, going back to this, we can see the company is valued with this calculation at a $1.99 billion market cap, or $2 billion for simplicity's sake. Now let's compare that with where APXT, the SPAC stock, is sitting at today. Today, this company has a $700 million market cap, but to calculate the true value of the combined company after the merger, we gotta pull out our calculator and do some quick math here using the current outstanding shares and the total shares and the percent of the company that Apex Technology investors own. That was a lot of blabbering, I know, and I'm not gonna bore you guys with the calculation here, but I did the math, and essentially what you're paying for today is around a $3.97 billion market cap post-merger. So for simplicity's sake, you're paying $4 billion for AvePoint if you're buying into the SPAC today. So that should kind of raise a little bit of a red flag. You know, they announced the merger at $2 billion, but you're paying $4 billion, 2 times that value. Does it really make sense? That's kind of a question you have to ask yourself. To me, I need to look at the financials, so let's look at that right now. For 2020, they're expected to close in with $148 million in revenue. And looking 2 years out, this is expected to grow to $257 million in revenue. Some pretty nice growth there. This means though, using our calculated $4 billion market cap, we get a price to sales of 27x for 2020 and 15.5x for 2022. That is a rich valuation. Now I know this is a subscription type business, so demands or commands a premium. I know it's a software company, they have high margins. Those are all things that actually add to the valuation being a premium. But guys, a 15.5x for revenues 2 years out, that we're just assuming that they hit that, that's kind of a rich valuation. Now this brings me to my next question: is this stock actually worth buying? So from a pure fundamental perspective, you know, using market cap, price to sales, all these metrics, I think this company is a pass for me personally, because it is too rich of a valuation for what the business I think is actually worth. Even with their high growth rate, even with their, you know, huge market potential, I think it's possible that you're paying a pretty high premium here for the business for what it does today. Now, that being said, I do want to address one thing, and that is you got to kind of think outside the box a little bit, this company specifically, and a lot of these other smaller businesses as well. We saw this recently happen with Slack, right? We saw CRM, Salesforce come in, and the rumor is, at least right now, that they want to buy out Slack for a nice premium. I think that this company is also a possible buyout target. Obviously, the company buying possibly would be Microsoft, because this company is dedicated to Microsoft's ecosystem and Microsoft's products. So it may be a good fit for Microsoft to bring them in, add more value to the customers, upsell their customers on this service. And it's kind of a win-win for both, AvePoint and Microsoft. Also, Microsoft has tons of cash on their balance sheet. They can easily buy out this company even at a premium, not really feel a dent there, make that money back in like a quarter or two, but it could help their business out tremendously with this increased value to customers. Now, if that does happen, that could mean a possible 2x opportunity, a double up opportunity, multi-bagger opportunity, whatever you want to call it, in this stock. And that's kind of, I think, the end goal here if you are investing in AvePoint. Now, the reason I say that would probably be their best end goal is because, while their addressable market is huge because Microsoft's base is huge, there are still going to be a lot of large companies that are like, AvePoint may have a good service, but we don't want to go outside the pure Microsoft ecosystem. We want to stick with Microsoft, only Microsoft. So that just rules out a potential customer for AvePoint. I think that's a big concern that a lot of people are really making it out to be. But hey, that's just my opinion on the subject. Now, the risk of this business is if you're buying in today and Microsoft changes something in the future that, it makes it difficult for AvePoint to really use that data and create those analytics and all that stuff, it's not going to be a fun time for investors in that stock. Also, Microsoft may never be interested in purchasing this company. Maybe they're just going to build their own equivalent platform and just compete with AvePoint, which again would be very devastating, I think, to AvePoint and shareholders in AvePoint. So it's kind of like you gotta balance everything out here, Like Microsoft is huge, they're growing, which means that AvePoint has a growing market. But because they're so reliant on this one company, Microsoft, and their products, it makes them a lot more riskier than other businesses that provide services to a whole bunch of customers using a whole bunch of products. If you think that paying $4 billion for this kind of risk for a potential 2x, 3x, 5x return over the next few years is worth it, then yeah, maybe the stock is actually worth buying today. But in my opinion, my thoughts, my views on this is I'm going to stay away. I like the model. I like that they're offering value to customers, but I don't like the valuation and kind of the risk that this company carries with it. It's kind of crazy what we're seeing here in 2020. It's essentially SPAC mania, if you want to call it. I've heard that a few times. And really, any company that goes public here through a SPAC reverse merger sees a massive pop in their share price. And then slowly things come back to reality, shares trickle down. There's a few winners still, but majority do end up doing kind of poorly over the longer term. So just keep that in mind if you are buying into this company. Maybe it's a good short-term play. I don't know. We don't really focus on that on this channel. We focus on long-term investing. And from a long-term investing perspective, I don't really think this is the best opportunity if you're looking for a software as a service, subscription type company. But hey guys, I love hearing your opinions and I want to hear opposing views on this as well. Let me know in the comment section down below what you plan to do with the stock. Are you just going to be watching this? Or are you actually going to play this SPAC here? I'd love to hear your thoughts, as always, in the comment section down below. Either way, thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.